last strategy here, the price movers. So we try and group them, since they're similar. The bullish bearish pre-runner are similar. The vol rise and price mover are also similar because we're using the same strategy. We're using a long strangle. The non-mover, the vol crush, those are iron butterflies, and then the runners are, long call, long put. So this is kind of like the complement to the volatility rise. The main difference here is that we're getting in prior to earnings, but we're holding this through the earnings announcement because the stock exhibits large moves as far as the earnings announcements. So it's moving a lot each earnings announcement, or a majority of the earnings announcements. And we look at expected move for this. We want things to get outside the expected move. So what the market makers are expecting, stocks that consistently do that. So you can also do straddle here. We advocate, the strangle, going to cost less. If you get direction right, you could still lose that straddle. If you get direction right, you're probably not going to lose that strangle for the most part. So, we also have the 25% profit target. We have a 50% stop on this, and you're getting out the day after the earnings release. And this is the same theory as the previous one. Why we're using a strangle. Yeah, so we're doing that, 60 days out will help, the implied volatility increase is going to help cushion, your time decay. Obviously, you're holding this one through earnings, so you're going to have that vol crush. So, if it doesn't meet criteria prior to earnings, it's going to need to do a big move on the earnings day. So that's what these candidates have exhibited. So same setup as previous for the volatility rise. We're doing 25% profit target, 50% stop loss, days expiration 2 months out, and then we're buying right below the upper standard deviation, and we're buying the put right above the lower standard deviation. So we're looking for, things that move 3%, 7 out of 10 times here. I think I need to update that. Okay, so Zillow is a candidate here. This is the Q3 trade that we presented last time. So you can see the IV rise, 10 days out, pretty strong, no negatives. And the testing, this is the earnings move also. So this tells you the percentage move it did, the previous 16 quarters. So you can see this thing's moving quite a bit, almost, the last 2, 4, 6, like 9 quarters, it's moved a lot for the most part each quarter. So that's kind of the candidates that we look for these mover strategies. So this one, you're entering the previous Thursday prior to the earnings, and this is a strangle. So, 90% win rate, looks like is holding it through quite a bit. Quite a few of these earnings announcements. You had the one loser here, not too bad. So 90% win rate, really strong profit vector for Zillow. And then, so what happened, 1029, That was our trade entry for the Zillow. And, you know, pretty much we have our nice little graph down here of profit loss. So you can see here it just spiked up and hit that profit within like a week. So it was a good trade, again. And, going forward, we still have the same criteria previous Thursday prior to earnings for, the Zillow. So, just to reemphasize, we get in this trade the Thursday before the earnings, and we put in our 25%, profit target. So you can, so you can see that, as soon as it'll hit, if we had an order, it would have closed right at the open here versus, in live trading. But our data shows, the end of day, so it's a little higher, and that works for you and against you sometimes. But so, same thing here. Thursday before, we put in our limit order and close it out right after the earnings, one day after the earnings. So it's showing an even better profit factor now, same exact trade. But that one did really well, obviously. So for the movers, we have 2 over 100%. We got 7 over 90 and 28 total trades. Same thing, you're getting in before earnings, so you have to, be on top of earnings change announcements. And I'll show you a tool in the system in the earnings plan where it'll tell you whether it's confirmed or not and whether there was a change or not. So we have all that. We track that for you. Sometimes our data, from Zacks doesn't, they don't have an update to it. Whereas, maybe another source, the company website, some of the other websites out there that, do with financial information may have a better earnings date. So sometimes you just have to be, on top of that for these, anything, before earnings. Same thing, limit orders, you can put in a stop here and you exit after the earnings release.